Welcome to the Lifestyles Unlimited Real Estate Investor Radio Show, a real estate investment program. Listen and learn how to use real estate to build wealth and passive income streams for you and your family. We bring you experts every day to discuss and answer your questions on everything from single-family homes all the way up to 600-plus unit apartment complexes. And now, the Lifestyles Unlimited Real Estate Investor Radio Show.
Welcome to the show. My name is Al Gordon, and as always, we're working on your financial freedom. I want to say a very happy Monday to everybody out there. You know, we've made it through another weekend. In spite of what's going on in this country with coronavirus, we have advanced through a good portion of this month. And, you know, the end of the year, it's coming up. It's a lot closer than you think. One of the things that I've learned as I've gotten older is that time tends to go faster as you get older. I don't know why it is. I can't explain it. Well, let's just take you back to when you were in maybe grade school, and, you know, your biggest responsibility was to do some chores and maybe to go to school. And then you had summertime, and then summertime just seemed to drag on forever because you had nothing to do. You know, it was in hindsight, maybe that wasn't such a bad thing. But then you go through life, you go to school, you get into the workforce, and you slave away in that workforce for a good portion of your life. And, you know, if you're like me, you found a way to exit that workforce. You found a way to retire yourself. And, you know, when you get to that point of being able to retire yourself, things are different. You know, you get your time back. It's almost like you were back in grade school and it's summertime because the hours are yours to decide how you'll spend that time. But, you know, the crazy thing is this, that time, it just seems to go much faster the older you are. And, you know, I used to have older people tell me that. Oh, wait till you get to be my age. You know, time is going to fly for you. And I didn't believe it. Nah, I didn't believe it. But I got to swallow my pride, and I got to say, you know what? They were right. They were right. Time does have a tendency to fly. Now, what's all of that got to do with what I'm going to talk about today on today's show? Well, I think it has everything to do with what I'm going to talk about on today's show, because what I'm going to talk about is a gentleman that presented information at a case study event last week. This gentleman became a member of Lifestyles Unlimited back in July of 2015. So he's been a member of our organization for, well, he's over 5 years now, because, you know, if you do the math tells you he's been a member for at least 5 years. And one of the things that he was able to do as a member was retire himself at an early age. That's right. He was able to retire himself at an early age. He essentially walked away from a career as a mechanical engineer. And he did that job out of college, was very successful at it, worked for a very large national oil and gas service company. He did sales for them. And one of the things that he learned along the way was, although he was good at his job, he really didn't want to be on that glide path of having to work for 35 or 40 years. And when he discovered Lifestyles Unlimited, he decided to take advantage of our education and mentoring programs. And in doing so, he purchased residential income producing real estate. And the kind of real estate that he purchased was apartments. He didn't do anything with single family. He went directly into apartments. And one of the properties that he presented last week was a property that effectively retired him. It was the property that he was able to acquire. He was able to operate effectively. He was able to increase the value of this property over time. And he was able to double his money in, get this, 31 months. It took him 31 months in order to take a nest egg of about $300,000, turn that into $600,000. And when he did that, that created the catalyst that allowed him to basically go to his employer and say, I've really enjoyed working for you guys. You all have taught me a lot of great things, but it's time for me to move on down the road. It's time for me to do something a little different. It's time for me to be a full-time real estate investor. And he's been a full-time real estate investor since 2019. Now, he invests in properties a couple of different ways. He invests as what we call an independent rental operator, meaning he will go out and he will buy a property, maybe by himself or with a partner, and he will do the things necessary to get that property turned around, stabilized, so that the value of the property increases and the cash flows coming off of that property do the same. He'll also take his money and he will partner with individuals at Lifestyles Unlimited that are buying apartment communities, and they're syndicating those deals. So he'll go in as a passive investor. He's also lead investor certified. And what that means is he has taken all of the training courses necessary to be a certified lead investor at Lifestyles Unlimited, and he's able to syndicate his own deals. But the deal that he presented last week was a very interesting deal. And it was an IRO property, independent rental operator. He brought on board one additional Lifestyles Unlimited member to be his equal partner. And I'll tell you what, they did some great things. And we're going to get into it when we come back from the break.
Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show. Now, let's get back to your map to financial freedom.
Welcome back to the show. On today's show, we're talking about Chris. Now, Chris is a younger guy. I think he's in his very early 30s. I'm not 100% sure because I just didn't ask him how old he was. But, you know, given the fact that he's married to Carolyn, and they've got two kids, ages 7 and 4, and the fact that, you know, he graduated from school not too long ago, and what I do know about him, I make the assumption that he's like 30 something. And what's really neat about Chris is he followed all of the education and all the mentoring that was provided to him, and in doing so, he managed to get himself retired. He managed to use the passive income that comes from investing correctly in residential income producing real estate. And he was able to offset his ordinary expenses. And in doing so, he was effectively able to go to his employer and say, you know what? It's time for me to do something else. I'm going to transition out of being a sales guy for y'all, and I am going to become a full-time real estate investor. I'm going to get all of my time back. I'll be able to manage my time the way I choose to manage it. I will operate my real estate holdings, and that will be my job. And that job will not take nearly the amount of time that he was expected to put in at his former employer. Yeah, Pretty cool stuff. So let's get into this thing. Now, we asked Chris, what was it that caused you to join Lifestyles Unlimited? I mean, just give us the talking points. And he said, you know what? The number one goal was to replace his primary income with passive income and eventually stop working. And you know what he did? He did that. He achieved that goal. Some of the other reasons he came to Lifestyles Unlimited was he wanted protection from the volatility of a commodity-based industry. You got to remember, when you're working in the industry that he was in, and I won't tell you the firm that he worked for, but it was one of the big oil and gas firms that are out there, you are linked to how that commodity does. So in other words, what I'm getting at is, when oil prices are high, everybody's working, everybody's making money. It's like, the sky is raining dollar bills. But when oil prices plummet, yeah, you can imagine what happens there. Just the opposite effect occurs. And, when you're in sales, like he was in sales, if you can't go out and market your services to an organization because that organization is basically not working because it doesn't make any sense for them to work because the cost of oil is so low that it doesn't cover their overhead, they don't work, that has a negative impact on you. Yeah. And all of you folks that work in the oil and gas industry, you know exactly what I'm talking about. The other things that he wanted was he wanted to have more financial freedom. And as a result of obtaining more financial freedom, it would equate to a better lifestyle for himself and for his beautiful family. And along those lines, he was very clear. He said, you know what? He wanted to benefit from all the mentorship that is available through Lifestyles Unlimited, and he wanted to gain access to valuable real estate investing resources. And when you become a member of Lifestyles Unlimited, you get access to all of those things. You get everything that you need so that you can put together your real estate investing business. You can go out and you can acquire assets. You can own and operate those assets and then dispose of those assets when it makes sense for you to do so. And in turn, that allows you to go out and buy even more assets. It's really pretty cool, especially once you get into the flow of things. Now, the property that Chris talked about was essentially his first multifamily acquisition. He and another Lifestyles Unlimited member by the name of Alan decided to team up. I mean, they both had about $300,000 that they were looking to invest. And what they were finding was if they invested separately, they could buy properties that would work out for them. But if they combined their resources, if they teamed up and developed a partnership and then basically acquired this particular property that they acquired as a partnership, it gave them more of an ability to leverage their money. It also allowed them, because they were able to buy a bigger property, there are economies of scale that come from ownership of a larger property. That's just the way it works in the multifamily space. The bigger the property, the more services and staff that it can support in the bottom line. And therefore, you have people that you hire to operate the day-to-day goings on of that particular property, and therefore you don't have to. But what they chose to do was they went after a property. It was a 54-unit property built in 1967, so it's a little up there in age. They bought it in February of 2016 for $1.82 million. And that price at that time turned out to be about $33,700 per door. Now, their cash out of pocket in order to do this deal came in right at $596,000. And basically that was the money that Alan and Chris had that they combined together. They were able to go into this particular property and acquire it. Now, they knew that this property would require some capital improvements. And I'll talk about some of those things in a moment. But their budget was about $150,000 to do those things. And one of the things that they realized was, well, first of all, they didn't have an extra $150,000 just laying around. But this particular property, because it had been owned by somebody that at least was taking care of the property, they figured out that they could go in, take over operations of this property, and then they could use the cash flow that was coming off of this property on a monthly basis, and they could re-inject that cash flow into the expenses that were associated with the capital repairs that needed to be performed on this property. So that was the game plan, to take basically the first 18 months worth of cash flow, not put it in their pockets, but to re-inject that money back into the business so that they could get all the renovations done on the property that they wanted to get done. Now, they were able to secure a $1.3 million loan. Now, the interest rate at that time is a little bit higher than what we experience today, 5.375% interest, but they got a 30-year amortization, and it was recourse. When we come back from the break, I'm going to get into the details of this deal so that you can learn from them.
Warning, listening to the Lifestyles Unlimited Real Estate Investor Radio Show will change your life. We will teach you how to create wealth and passive income so you can be financially free. And now, back to your host.
Welcome back to the show. So we're talking about a deal that Chris presented last week at one of our case study events. And this is a deal that, well, it got him retired. It really did. You know, he became a member of Lifestyles Unlimited in 2015, in July. And the following year, in February of 2016, he and another member of Lifestyles Unlimited, Alan, teamed up, joined forces, and bought this property. Now, they paid $1.82 million for the property. It was built in 1967. It's a 54-unit apartment community. And their cash out of pocket was just under $600,000. So basically, they both had to pony up about $300,000 to do this deal. And the property itself is in a very good market. I mean, it has very good rental history. It had a lot of things going for it, but it also had some things that needed to be addressed. And those things that needed to be addressed were specifically in the renovation side of the property. Now, if you had driven up to this property before Chris and Alan took over this thing, what you would have seen was a property that it's kind of it's a U-shaped configuration. It's a two-story. Everything is all connected together. The ground floor is covered in brick on the frontage, and it looks very nice. The second story is kind of looks like shiplap, to be honest with you. It's not shiplap, but it looks like shiplap, but it's a wood exterior. So you see that a lot in Texas markets. I mean, that's just the way it is. The problem that I had with the property from the before photos was the color scheme. The previous owner, I don't know if the previous owner did it, or I don't know if it was done by whoever owned it prior to them, but you've got a very beautiful kind of soft brick exterior on the ground floor. And the upper floor, it is kind of a greenish, light green. It just kind of reminds me of when, I would feed my kids when they were babies. I would feed them peas, and they would kind of regurgitate it back up. Well, that's kind of the color that the exterior of this property had on the second floor. And it doesn't look very good. It doesn't match the brick. And you're not going to go in and paint brick. I mean, well, some people do, but the brick on this property looks absolutely great. Don't mess with it. Now, that second story, that needed to go. And not the second story itself, but the color scheme. And you know what? They addressed it. That was one of the first things that they took care of, was they repainted the exterior of the property, and they chose a color scheme that was very, very complementary to the light brick color that was on the downstairs. So now the property matches it, and now has something called curb appeal. It actually looks really, really nice. And with that, they went through and they painted all the doors, all exterior doors, kind of a dark brown color. And it just, I'll tell you what, just the difference between a coat of paint on this property makes it look, well, it's the big difference between what it looked like, which was blah, to what it looks like now, which is inviting. And that's what you want. I mean, you want to have your property appear inviting, because after all, you're providing living spaces for people that want an inviting property. And I trust me, there's a lot of property out there that isn't very inviting. It's one of the things that we do at Lifestyles Unlimited is we help you understand that you need to make sure your property is inviting to your residents. It's a very important component. Now, internally on these 54 units, that's where they needed to do some work, because the interiors really weren't touched on this property. So I'm looking at a picture of a before picture. And what I'm saying is just kind of a bare bones kitchen with, looks like there's like a cabinet. And when I say a cabinet, I mean a cabinet mounted on the wall above the kitchen surface where you would prepare your meals. And of course you have the sink and everything like that. And then everything is it's just kind of bare bones. This property looked very bare bones on the interior. So Chris and Alan didn't like that. What they did was they went in and they kind of redesigned these kitchens and basically put in the cabinetry that was really needed to be there, because what was there before was very limited, and it really wasn't making that property very useful to the resident in the property. They also went in and they upgraded the appliances. So they put in new appliances, new stove and oven combos, new refrigerators. It looks really, really nice. The other thing that they did was they added a two-tone paint scheme to the interior. And by doing so, it really makes the interior of the properties look special. I mean, really, it looks really, really nice. It looks so much more inviting than what the units looked like when they took over the property. Now, they couldn't go in and rehab all 54 units at once. You just can't do it, not unless you tell everybody they have to leave. And if people have leases and they're paying on time and meeting the terms and the conditions of their lease, you can't tell them to leave. You could ask them, hey, I'm going to fix up your property. And they're kind of like, no, I don't think so. So my point is this. It took them some time to renovate all 54 of the units, but they were able to get renovations completed on all 54 units over an 18-month period of time. And, that takes a little bit of an ability to sit down and plan, a little project management going on there. But, when you're dealing with a mechanical engineer, which Chris was by trade, project management, not too hard to do at all. Now, it's important to point out that they had a game plan going into this property. They had a game plan going in, and they had specific goals that they had set, performance objectives, if you will, for this property that they required themselves to meet. What am I getting at? Well, they basically made a determination that they were going to hold this property for 3 years. And they gave themselves specific targets for where that property would be based on income, where that property would be based on operating expenses, where that property would be based on the net operating income of the property. Because remember, it's that net operating income that determines valuation for the property. So it's very important to focus on increasing the revenue streams without going beyond what the property has the ability to do. But this property had the ability to provide rents, 54 of them, as a matter of fact. It also had the benefit of a laundry room. So there was laundry income that came in on this property. Now, the operating expenses, one of the things that they figured out real quick was the expenses on this property were higher than they needed to be. So they needed to focus on getting those expenses down. And they targeted reducing those expenses over a 3-year period of time. And they were very successful in meeting those goals. Now, we come back from the break. I'm going to get into what they did with the property, what the property did for them, and you know what? You're going to learn a lot. Stick around. I'll be right back.
One of the things I'd like to get across is that your whole life you wanted to make a change, right? But you never had the time. This might be it, because we have online education that you can get involved in.
We're now going to bring the free workshop to the entire country and really the world. Anybody who is interested can participate in that. We're going to live stream that free workshop and have people online with you on the live stream, talking with you, answering questions, interacting. You're really going to get a great feel for the Lifestyles community from this. And you can register for that. So if you want to find out about us, this is a great way to take a look at us and what we do.
Lifestyles Unlimited has been helping people succeed since 1990. Join us for our free online real estate workshop and learn the 7 principles we teach to run our businesses and provide for our families. Register at lifestylesunlimitedworkshop.com. That's lifestylesunlimitedworkshop.com.
Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show. It's time to turn up the volume and fine-tune your passive income plan so you can create the lifestyle you've always wanted.
Welcome back to the show. Time is flying. Like I mentioned in the opening segment that time tends to fly. Well, we're in the 4th segment, and I'm just having a good time sharing with you what Chris and Alan were able to create. Now, this particular property they bought back in 2016, and they went to work on it. They basically combined their resources, which added up to about $600,000 that they needed to have to go into this deal to pay for the down payment, the closing costs, and also to pay for some of the capital expenses. They elected to use the cash flow coming off of the property rather than putting it in their pockets as spendable cash, which they could have done. They used that money to reinvest back into the property, and by doing so, they were able to complete all of the renovations that they determined were necessary on this property. Now, they didn't go through and do like the same thing to every unit. Not every unit needed the same amount of work. Some units needed more work. Some units needed less work. But they figured all of this out when they were going through the buying process, and they physically inspected all of the units. That's one of the things that we do, is we go and we look at all of the units. We determine what needs to be done to get that unit to our standard. And we do a back of the napkin, figure out what needs to be done, and you file that, and it's good to go. So you've got all of the building plans, or the renovation plans, I should say, for all 54 units, because you've walked all 54 units. Now, there are folks out there that don't walk all their units. They take a snapshot. They say, I'll walk 10 or 20% of them. And I think that's short-sighted. I really do. I think you need to see what goes on inside all of those units, because if you don't, then you walk into something without knowing. Well, they walked into this property knowing everything they needed to know about this particular property, and they went to work on it. So after about a year and a half, they were able to complete all of the repairs that were necessary on this property to get it to the standard that they wanted, and they were able to effectively operate that property. Yes, very effectively operate it. Now, I think it's important to point out that over the time period that they owned this property, they were continually improving the property. They were continuing to operate the property effectively. They were doing the things necessary to generate cash flow on the property, and they generated a lot of cash flow on this property. The projections that they shared with us basically stated that once they finished injecting money from cash flow into renovations, they were bringing about $100,000 of cash flow per year out of that property. So when you think about it, that works out to be about $50,000 in cash for each of them on an annual basis. And their projection for year 3 actually showed the cash flow moving up to about $130,000 per year, which works out to be about $65,000. Now, the reason I think you need to understand the implication of the cash flow is this. I just did a search. I said, what is the average salary for a mechanical engineer out there? Now, I have no idea what Chris made when he was working in the oil and gas industry. No idea. But the information that I Googled basically said an engineer, the average mechanical engineer, makes about $71,000 per year. So what I'm pointing out to you is that by investing in this property and operating it correctly, Chris was able to replace his income. He was absolutely able to replace his income, because if, again, I don't know how much he was making, but when you take off the taxes, the ordinary taxes that you and I have to pay on income, when you take off the Social Security and Medicare taxes that you have to pay when you're an employee, when you take away the expenses associated with just having a job, you have to get there, you have to come back. So there's transportation costs. You may go out to eat every day, so there's costs associated with that. What I'm getting at is that $65,000 that he had coming in, by the way, he's able to depreciate the asset, and therefore that depreciation expense is counted against the income that he's pulling from that property. So his tax liability is much, much lower based on the fact that he's investing this way. But it's important to know that in less than a 3-year period, he was able to position this property so that it was providing enough cash flow to replace his ordinary income. That was the point where Chris realized he was retired. He was in control of his life. He had the ability to go to his employer and say, you know what? It's been fun, but I'm done. And I'm moving on with my life. And he did exactly that. He did exactly that. Now, I do need to point out that Alan and Chris, they sold this property. They did. They sold it in October of 2018, and they sold it for a price of $2.55 million. That gave them a net proceeds from the sale of $1.1 million. And when you add on the operating cash flow that they were able to obtain once they stopped reinjecting that money back into the property, their combined return on investment was $1,196,600. Yeah. Now remember, I told you that they put $600,000, almost $600,000 into this property. They sold it not even 3 years later and received a 101% return on their original investment. And they did it in 31 months. 31 months. So the big takeaway for you is this. Whatever you're doing to invest your money, if you're not able to double the value of that money like Chris and Alan were able to do with this asset in a reasonable period of time, well, they did it. They doubled their money in 31 months. What are you doing in your current investments? Is the stock market for you doubling every 31 months? Yeah, I don't know. Now, what's also very interesting to point out about this property is that when they sold, they were able to take the proceeds from that property and they were able to reinvest into other properties. Yeah. So, the one thing that comes to mind is this. If they sold the property, then all that cash flow that they were pulling out of the property, well, that goes away too, right? Well, yeah, it does go away. But they doubled their money. And they were able to get into other investments with that money that's allowing them to do the same things that they did on this 54 unit. It's the concept of wash, rinse, repeat. Wash, rinse, repeat. You just keep doing it. And by the way, these two gentlemen have other investments besides just that one particular property. So it's not like they just walked away from all the cash flow. They still have cash flow coming in from the other investments. And then by reinvesting into follow-on properties, those follow-on properties had the potential to pay cash flow also. Yeah, it's really cool when it works out that way. Now, we asked Chris what his keys to success were, and he said flat out, partnering with Alan was a great thing because they were both properly educated on how to invest in real estate. So their mental acuity doubled from the fact that they were working together. They also pointed to the fact that networking was very important to them. Networking was a key factor for them to be able to find deals. The other thing that they really liked was the fact that Lifestyles Unlimited taught them how to evaluate and underwrite deals so that they knew what they were getting into before they got into it. And that's not anything that they had learned anywhere else. And another key to their success, well, they self-managed the property. Yeah, they did, which helped to keep the cash flow at a maximum level. And it didn't take them a ton of time to do it. It really didn't take them much time at all. So the lesson to today's story is this. You can change your life, but you got to get started. Come check out one of our free workshops at freeworkshoplivestream.com. That's freeworkshoplivestream.com. And remember, it's not the money, it's the lifestyle.
The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented on the Lifestyles Unlimited Real Estate Investor Radio Show constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.